Hello guys, it's Ben Nathan here from Ben Nathan FX. Now today we're going to go through something that I call safe haven flow logic. Okay. Now at the moment the markets, as of mid-February 2019, are overall very bearish. Now because of this, there's plenty of currency worth selling. However, there's not much money worth buying. So what do traders do? They happen to go to safe haven currency. So what exactly is a safe haven flow, first of all, before we get into the logic and how to trade that? Well, let's use an example, okay? So the US dollar, following the FOMC from January, was a bearish currency due to a change in fundamentals. So it was a good currency to potentially think about selling. However, there wasn't really a standout currency that was worth buying into. And of course, whenever trading Forex, of course, there's going to be a pair. Now, it's no good just selling the US dollar against any other currency, because then the trade is going to have a battle on its hands. Because it's going to have, a push one way from one currency, a push the other way from the other currency. So it's not going to work. However, if you sell a bad currency and buy a good, that's when you get a nice smooth ride. The in-between is selling a currency that's bad. If there's nothing that's good, look for a low-risk currency. So the Japanese yen for some time now has been what's known as a low-risk currency. Why? Well, because it moves up quite well, and essentially it's a cheap currency. So it's a good bet that, if you invest into that currency based off weakness on another, you're going to hope to see something good come from that. So essentially that's a safe haven flow, okay? So to put it another way, safe haven flow is the collective psychology of traders as a whole, okay? So if the currency is going up with no economic reason, then there's got to be a reason for it to move, and that's going to be the fact that a collective of traders are investing in that currency because they see it as a low-risk move. So that's what a safe haven flow is, okay? So why is it good? Well, we've kind of touched on that already. It can be good because, if you've got nothing to use, so if you've got a poor currency but you've got nothing to buy against it, sometimes if safe haven flows are strong, then that gives you an opportunity to pair a low risk currency with the poor one. But why is it bad? Well, as we know, the markets are fickle. Traders are even more fickle. So you need to bear in mind that when you trade based on a safe haven, you're not investing in what the markets are doing. You're investing in a bunch of other traders that you don't know. You don't know how they think. You'll probably never ever even hear of them, but still you're putting your trust and investment into their logic. So, there's no nice way to put it. If you're trading safe haven flows, what you're doing effectively is jumping in, following the herd, and hoping that they continue to walk the same way. So as you can see, it's quite a dangerous thing. Now, how do you trade safe havens? Well, there's a few steps, okay? Now, the third one, which we're going to go through shortly, is to react to change to protect yourself. But before we get there, we need to know why are safe haven flows happening, okay? So, a good example could be at the moment, oil's on the down move. So the Canadian dollar's weak. The pound is under pressure because of the Brexit. The euro's had some bad news too. So you've got all these major currencies that are poor, but then there's not really much to trade with it. So people are buying into the Japanese yen because it's seen as a fairly safe currency because it's low cost, therefore fairly low risk, and there's not a lot going on in terms of economic news around that currency either. So that's what's happening. That's why the safe haven flow is there. So it's other traders are looking for a currency that they perceive as being low risk to trade. So what you need to do, you need to apply logic. Okay, so that's really important. Now, when I talk about logic, I'm talking about before you even consider trading a safe haven flow or a safe haven currency, you need to look at the logic about what's happening. So logic one. Okay, so Japanese yen is strong. It's got safe haven flows because there's nothing there economical to push it up. So second wave of logic, well, hang on. That means that people are buying into that based on other currency weakness. So what is that currency weakness? Where is it coming from? Then logic 3 says that that weakness in other currency is temporary, okay? So if you think about it, all these people that are flowing into the yen based on, say, the poor pound or the poor Canadian dollar, what's going to happen when that weakness in the pound or the Canadian dollar reverses? Well, once that happens, there's absolutely nothing there to keep the yen valuable, okay? Because that safe haven has come from other currency weakness. So what's going to happen when that weak currency picks up? That flow is going to reverse and go back out of the yen, as an example. So that's the logic you need to think about. So what you need to do is, the first point we kind of said is react to changes to protect yourself. So what do I mean? Well, it's no good jumping into a safe haven currency willy-nilly, okay? You need to know, firstly, of course, why is it happening? Why are you investing? Why are you following other traders? But what you need to know as well is, how long can it last? You know, what could happen that could, change those safe havens? So, as an example, we've used a pound as an example. So, well, if news comes out to say that actually it's still a no-deal Brexit, so things are going to be delayed, well, hang on, the pound's probably going to go up a bit more. So, therefore, safe haven flows will go back out and back in to the pound. So, need to know when that could happen. So, follow the news feeds, follow the news in general on those currencies. What about if, you're in the Canadian dollar, selling that based on poor oil, buying into the safe haven yen? Well, okay, what could change? We've got economic calendars all over the internet. Whenever the next big release is coming out for the Canadian dollar or Canada, when are the next oil readings coming out? When is the price changing? That's the kind of stuff you need to really be in tune in. So if you're able to, be at the charts, be around, monitor the news feeds, know exactly what's going on, sure, safe havens can be traded. But if you can't do that, then you're much safer staying away. So hopefully that's been simple. It's a very simple, logical approach to what safe haven is and how and when you can trade that. So I hope that's helped everybody. In terms of further help, it is there. Feel free to check out the website. There's going to be an exciting webinar announcement very soon where I'm going to be showing you some of my methods. It's going to be a free webinar, and I'm pretty pumped about it, and I'm looking forward to getting the word out there and helping a lot of people through that. So do watch out for emails from me about that. Other than that, guys, have a lovely weekend, and we'll speak soon.